Hey, Jim, how you doing today?
I'm doing well. John, how are you?
Good. Hey, thanks. Jim Vivenzio is senior counsel at Perkins Coie in Washington, D.C., but Jim has just joined the firm after over 32 years in the government, many of those years dealing with a variety of enforcement issues in AML and other places as well. So we thought it'd be really interesting to sit down with Jim and ask him a bit about his career. So, Jim, why don't we start off? I'm always interested in how lawyers got into the government to begin with, and then sort of walk us through some of the early issues that you dealt with, and we'll work our way to the present time.
Sure, John. Well, I started out in the law in private practice at a large law firm in New York City, and I was working in the banking space. And one of the things that I noticed as a young lawyer was that everybody who was anybody in banking seemed to have experience with the government. And so I ended up moving over to the Office of the Comptroller of the Currency, which regulates all the national banks. And, thinking that I'd do a quick stopover, get some government experience, and then go back into banking law. And now, 32 years later, it's been quite a ride. It was interesting when I joined the OCC. It was back in 1991. Essentially 3 decades ago.
Right.
At that time, a new law had just been passed called FIREA, and FIREA essentially gave the OCC and all the federal banking agencies significant new enforcement authorities, mainly in response to the S&L crisis. And at that time, there was just a lot of enforcement work going on in the banking area because so many banks, there was a S&L contagion that also impacted a number of national banks. So I essentially got christened in the enforcement space in the OCC's New York office for the next 10 years. And ultimately, some of the work that I ended up getting involved in involved some of the early Bank Secrecy Act cases that were brought. There was the old Jefferson National Bank case up in Watertown, New York. There was the Broadway National Bank case in New York City. Two really fascinating and interesting early, BSA AML enforcement actions. I ended up coming to Washington in 2000, and I had the opportunity there to work on the old Keystone National Bank case in West Virginia that involved one of the biggest frauds for a community bank up to that time. I was brought over to DC by Bob Serino, who John, was one of the pioneers in this area, real trailblazer like you are. And then right when I came to Washington, 9/11 happened. So then we had all of the USA Patriot Act regulations that we were involved with and worked through that process. And then we had the big Riggs enforcement case that kind of elevated BSA enforcement to even a higher level with I think it was a $24 million penalty that was really unheard of at that time. And then as things progressed and I stayed in this space, I basically experienced another banking crisis with the 2008 crash. And then as a result of that crash, there were a series of big, large bank enforcement cases that were centered along technology with how they were using remote deposit capture at that time. Right. The reallocation of resources away from BSA compliance as a result of the crisis. And then there was also just widespread Casa de Cambio activity from Mexico that also had significant impacts. And then moving on from there, we had the beneficial ownership rulemaking, which was a significant rulemaking working with the other agencies and FinCEN. Then sure enough, we had the pandemic 3 years ago. and then came the AML Act of 2020. So it was quite a lot that I've seen in this space over the 3 decades. And as you know, you were a part of it as well. But it was really quite a fascinating ride. And then simultaneous with all of this BSA activity, over that time period, there was also just very interesting progressions, in the fraud space, and just how fraud evolved. Initially, back in the 90s, the focus really was more on bank insider type fraud. And and then we saw the IT type frauds taking off, like corporate account takeovers, and then you had the Ponzi's, with the Rothstein and Madoff Ponzi's, and then fraud became more foreign focused, with foreign actors and state sponsors of fraud. And then more recently, we've seen the pandemic frauds, and the cryptocurrency frauds with FTX and Vislato, and now we've got the focus on the priorities in the AML Act. So that was kind of another parallel progression that was also a part of my career. And then the third parallel is technology. I mean, heck, you and I were there with the advent of the internet, and then there was the Y2K issue, when 2000 rolled around, and all of the enforcement actions that some banks faced, for not having Y2K processes in place. And then we had, as a result of 9/11 and all the airplanes being grounded for a week, checks couldn't get processed, and we had the advent of remote deposit capture through the Check Act. And then we saw the advent of the Computer Information Security Act, the CISA, and critical infrastructure coming into play, and just how important IT had become to banks. And then moving on to technology, into modeling and the model risk management guidance, and how that could be applied not only to bank systems, but also the AML systems as well. And now we're in the crypto and the non-fungible token and blockchain space. And we've got we came out with the statement on innovation, and how innovation can be used in the BSA AML area, as well as the offices of innovation that were established at all of the federal banking agencies and FinCEN. And now we're seeing the advent of fintechs and third-party relationships. So a lot to unpack, but I just wanted to kind of give everyone just an overview of just how fascinating this area was over the past 3 decades, and the growth that we saw, both in the BSA space, in the changes in the fraud space, as well as what happened with technology.
You have outlined quite a bit, obviously, over the course of all these decades, and I want to unpack a few things. But what I want to get to begin with, besides all the information you've just given us, is your take on this. You've been involved in a lot of enforcement negotiations, whether it was, again, in the 90s till just recently when you moved on to the private sector. What do you attribute the mindset of those that intentionally, not those that are just incompetent or they make mistakes or what have you, because that's there too, but that intentionally commit fraud, violate the law? I know it's greed and corruption, I get all that, but you see across the table, from institutions, CEOs, corporate compliance officers, outside firms, you've been doing it for decades. When you do that, when you're trying to get to the bottom of an enforcement action, what's in your mind about what the other side thinks they're getting away with? I'm just very curious, because you've always had the reputation, sort of like your mentor, Bob Serino, straight shooter, let's deal with the facts, all that sort of thing, which is a tribute to both of you. But I'm curious, because you've done with all these frauds that they're committed so differently, right? Now they're using technology. Before, they used other methods to commit fraud. But what do you attribute all this fraud to in terms of the mindset of the fraudster, whether it be a traditional banker or just some criminal taking advantage of the system?
Yeah, I've seen all different scenarios of fraud, and back in the '90s, some of the frauds that we saw were typically insider frauds, and usually it's somebody that's been in the bank a while, and for whatever reason, things go bad, and you don't know what's going on in their head. Is it greed? Is it a medical issue? Could be lots of things. And then ultimately, there's some transactions that are irregular that get identified and results in in them being removed and penalized and sometimes jailed. So I've seen that kind of a scenario. Sometimes it's a loan officer, other times it's the bank president who is a pillar in the community and. Just for whatever reason, you see, making bad decisions and bad loans, and ultimately and sadly, in some of those situations, we saw the banks fail. I was actually at the Keystone failure in West Virginia, and I saw, firsthand the impact that could have on a small community. In fact, when we arrived to close the bank down, citizens surrounding the bank because they didn't know, what was going to happen with their money, their life savings, and it was really, devastating to see all these, salt of the earth people, just in that kind of a situation as a result of the fraud that took place there. And then ultimately, whatever happened with that community that lost its sole bank, and we all know how these bank branches really, are the economic engine, of small communities and just how important they are, and to be there when one was failing. Really had an impact on me, and it really shows the impact of fraud. It's a very complicated and complex web that, in terms of the impact that the fraud will ultimately have.
You mentioned the Watertown, New York, and we talked about this offline, and I was very interested in the scope of that because when we tell folks about the BSA and the AML days, and that there were satchels or leaf bags full of cash, they're like, oh yeah, sure, or they think that Scarface is an exaggeration. But talk about the Watertown case, because that sounded in the early days of AML a pretty interesting example of what people were trying to get away with. And I know it took years, and I know that there were several agencies involved, but walk us through that one, because that's sort of not only pre 9/11 but pre use of technology.
Yeah, it was back in the '90s when AML fraud was really cash centric. And so, I just started at the OCC as a young attorney, and I was responsible for handling our Syracuse office. One day I get a call from one of our bank examiners, and she had misjudged the amount of time that it was going to take her to get out to this branch that was out in the middle of the woods in upstate New York. And so she arrived, maybe 45 minutes, before the bank opened. And so she's online, essentially waiting for the bank to open, by the door of the bank. And she observes these two men pulling up in a pickup truck and unloading two Glad leaf bags filled up with cash. So you can picture this. There's there's a bank examiner waiting for the bank to open up with these two individuals with leaf bags filled up with cash, and she ultimately observes these gentlemen going into the bank, into a back room, and there was a teller back there with a cash counting machine and just kind of running the cash through this through this machine. And it's not an easy job because there's so much of it. It takes a while. And she calls me and she's telling me what's going on there. And our initial thought is, you really need to get out of there,
Right.
because we kind of thought she was in danger. I asked her to go back to the office, and we can, let's figure this out, later. And instead of going back to the office, though, she ended up going back to the main office of the bank and does all sorts of terrific analytical work on what was going on there, and really ends up uncovering just an enormous money laundering operation. And and so we ended up working that case closely with law enforcement, and and law enforcement did a tremendous job on the Jefferson matter. Ultimately, the case resulted in 20 people going to jail, being convicted, and it also resulted in a subsidiary of RJR Nabisco, one of the affiliates of the RJR Reynolds Tobacco Company, being indicted for cigarette smuggling through the St. Regis Reservation in upstate New York. So just at the time, it was one of the biggest money laundering cases that law enforcement was able to put together. Really kudos to them for just a tremendous job that they did out of the Syracuse office. They worked closely with Canadian officials as well. But the joke I like to make, and whenever I'm teaching a class of examiners, I would always share this story with them, is that one of the biggest money laundering cases in U.S. government history at that time was a direct result of a bank examiner who showed up early. Showed up early for a bank examination, and otherwise she would have may never have picked up on what was going on. So it's kind of an interesting tale. It kind of shows just how important that a bank examiner and just the having eyes and ears on the front lines can be, especially now where there's all this talk about changing over to technology and artificial intelligence to detect this stuff. But there's always that focus on on human intelligence and just eyes and ears and tellers and what they can see as well. So yeah, just kind of a funny story. That and then the other important thing too that this story also illustrates, is the impact of bank examination on BSA AML, and it really is a three-legged chair. You've got the examination function, you've got the law enforcement function, and you've got the bank function. And we all have to come together and work together in this space in order to make it work. And if one of those legs isn't a part of the process, the stool's going to fall.
Sorry to interrupt, but
sure.
I was going to go to that line of thought there, because as you know, because we've worked together for years, I spent a good portion of my career at the Bankers Association, and the banking industry has borne the brunt, some of it, logically, and some of it maybe not so much, about dealing with the Bank Secrecy Act. And so I'm curious, I agree with you about the three-legged stool, totally agree, and I think it all has to work together. But there is some, I think, legitimate criticism that the examining part of this, their roles are different, right? Law enforcement needs the data, needs the BSA information to investigate, eventually prosecute, what have you. But in some instances, the examiners, whose job is a little different, they're going to check policies, procedures, kick the tires, make sure the system works. But there's criticism from the financial sector at times that it seems like examiners are more focused on, I won't say check the box because that's a little naive, but a late filing of a CTR or an exemption that wasn't updated. All those things might be true, but really, is that what we need here? So from your vantage point, and now because you're going to be advising financial institutions, what's your take? I, like you, have friends and colleagues in the examining function and obviously respect what they do. But I think in some instances, the way it's crafted, that three-legged stool, we're not always we're not always set on the mission. And for me, the mission has always been get information in the hands of our partners in law enforcement. So what's your take in general about, you train examiners, so you've been through that, and I've actually done some of the FFIEC training too. But in some cases, I think the banks have a legitimate complaint, even though all banks aren't perfect, as we know, that in some cases the focus seems a bit misplaced. Fair statement or not?
Yeah, I think that's a fair statement. I mean, this issue, we've been debating it for decades now.
Right. Yeah.
About just how do we get all of the examiners on the same page, and it's not just an issue with regard to one federal agency's examiners like the OCC.
Right.
It's across the entire examination perspective, and as the BSA grows and covers other industries, there needs to be conformity throughout the process as to how these various industries, these various agencies are conducting these examinations, and are they check the box, or are they really focusing on the program itself, and and whether or not the program is truly broken or not. I know one of the things we did at the OCC is we really ramped up our examiner training, and redesigned a number of the courses, and then the other thing we also did, which I think is very significant, and I'm not sure this really got a lot of attention, is we also revised our violation of laws policy, as to how we cite a violation, and whether or not that violation, really needs to be included in the exam report. And kind of there's two types of violations that the OCC will cite, and it will be either a technical violation or a non-technical. And if the violation is construed to be technical, it doesn't need to go into the exam report. It can be communicated, just at the exit meeting with management. So that I think that goes a long way also in terms of reducing the impact of a violation in the BSA AML space, especially if examiners have the discretion to make those kind of judgment decisions, and that's something that we were also schooling, teaching the examiners on.
2023, we're these issues that we grapple with are global. From where you sit, being through all the decades of coverage that you've had, when a new client reaches you in your new role here and says, Jim, what are the big challenges in AML and adjacencies? So not just AML, but financial crime writ large, that we as a private sector entity, whether it's a fintech firm or traditional financial institution or what have you, what are the things that we should be aware of, and what should we be focusing our proactive resources on? What would you tell
them? I would tell them technology. Technology to me is key in this space. And I've been a big proponent and really pushing the technology angle. In my view, if the industry doesn't adjust, if it doesn't begin to adopt technological solutions, then this whole system is just going to collapse under its own weight. The burdens are incredible. The amount of staff that the largest institutions need to investigate alerts and evaluate suspicious activities is enormous. And one of the I think the best thing about the AML Act is really its focus on technology in this space. And I really am excited for FinCEN to ultimately begin focusing on some of these technological issues and the testing methods, rulemaking and what that's going to look like, and then just how banks will be able to implement algorithms and technology to reduce false positives and ultimately reallocate their scarce BSA AML resources to more important things. that really need to be focused on, especially in light of all of the widespread types of frauds that we're seeing, from ransomware to crypto to Ponzi's and things like that. And one of the things that I was also very proud of when in my days at the OCC, was getting that interpretive letter 1166 out, which came up with the streamlined SAR process for banks.
Right.
And kind of pulling out these low level suspicious activity reports related to structuring and automating that process, and that's just to me that was just low hanging fruit as to one way that technology can be used to reduce burdens and reallocate resources more appropriately.
Jim, I'll get you out of here on this. Given all your experience, what's your view of what I would call the AML community, the private sector part? So those folks that have to do this on a day-to-day basis, have they, over the course of decades, gotten, from your perspective, more proactive? I mean, early on, there was some tension. There's no question. We can remember the early days where there was a lot of pushback on requirements. What do we need to do? We're not law enforcement, all those sorts of things. My view is that's changed clearly over time. 9/11 certainly focused us, and certainly the crisis in 2008. But when you are looking at, again, the AML community, what's your take of their support? Are they true partners with law enforcement? You sat across tables from many folks as you were dealing with enforcement actions. What do you think in 2023?
I think there have really been monumental changes there, John. What I'm seeing today are truly our partnerships, and again, I think that all goes back to the FinCEN exchanges that are going on, and the sharing of information. The 314A and B processes are being upgraded and revised through the AML Act, and you've got this concept now of feedback loops. I mean, that has changed entirely in my view, and again, that's another exciting area is this whole information sharing
Right.
concept, and and how that can be further boosted. Because that to me is so, and even OFAC has been pointing that out in some of the public speeches that I've been seeing. Is many of banks, with regard to the Russian sanctions and oligarchs, are putting things together based on the CDD information that they have. And they're using the 314B sharing process to get additional information from banks. And the banking industry is then, filing suspicious activity reports and informing, FinCEN and OFAC of, all of these relationships that previously were unknown to the government.
Right.
It's come full circle, and that's been a real rewarding part of this practice that I've been seeing, and I just think it's going to get better as the AML Act matures and these regulations come out.
Jim Vivenzio, good luck in your new career at Perkins Coie. Really appreciate you sharing your insight today, and I'm sure we'll talk again. So, Jim, thanks so much for your time today.
Thank you so much, John. And again, you've been a trailblazer yourself, and I'm honored to be a part of this with you.
All right, Jim, take care. Thanks.
Bye.